Hi, it's Michael Farr at Farr, Miller and Washington. This week I want you to think a little bit about vigilance and knowing what you don't know. As the markets continue to make new highs, the Dow today is over 17,100, the S&P is right at 2,000. The 10-year Treasury is 2.43%. The euro is trading at 1.31. Barrel of oil is around $94, $95. The conditions all sound pretty good. Market prices continue to rise. Stock prices continue to rise. So remember, if the rule is buy low and sell high, this certainly isn't low. Question, are you selling? Should you be selling? That really comes down to your personal investment discipline. But I would tell you not to be complacent and don't trust things that seem universally, ubiquitously obvious. And I want to cite two quick examples. In May of 1999, the cover of The Economist read, "Drowning in Oil." Oil was $11 a barrel, and The Economist said it was going to $5. It never fell below $10 a barrel. In fact, in 1999, everybody wanted to dump oil and buy .com stocks. The reverse would have been the perfect trade. The reverse was exactly against 100% common wisdom at the time. The other example is the price of oil, again in 2008. When it got to a high of 147.5 a barrel in June of 2008, Goldman Sachs came out, pretty smart guys, and said it's going to 200. And Wall Street nodded, and all of the talking heads on CNBC, maybe with the exception of me and a couple of others, they all nodded as well. Oil was going to go to 200. Somebody even suggested it was going to 1,000. And they come up with these sort of spurious arguments that the per capita, per number of barrels usage in the U.S. has doubled over the past 15 years, and developing countries in India and China and around the world are using more oil, and the economy was good and we were using more oil. None of that was new. None of that explained a 47.5% increase in the price of a global commodity in 84 days in the second quarter of 2008. So, when you hear these universal truisms sort of thrown out there to support these very high valuations, be guarded. Look at your asset allocation. If your equity portion has crept up, be disciplined and cut it back. If you own stocks and you're not sure why you own them, do the research again. Make sure you know what you own, why you own it, and that you're going to be there for the long term. Remember that markets come down. That's normal. We haven't seen it for a long time. This one will come down. So as markets are making new highs, I'm encouraging you not to be complacent, to remain vigilant, and to remember those things that you're really not sure of, even though everybody else seems to be. If you need a little help sorting through your investments or your portfolio, give us a call at Farr, Miller and Washington. For Farr, Miller and Washington, I'm Michael Farr. Have a great week.